How to invest in the share market. New investors may be unaware of how to invest in the stock market and believe that a complicated process is involved. However, this is not the case. All that is required to start investing in stocks is a trading account, a demat account, and money to invest. You can even start with a small amount, such as 1,000 Indian rupees. Below are the key steps to take once you have the requisite accounts open with a broker. Step 1. What do you need to invest? Before beginning to invest in the stock market, you should have a clear idea of your investment goals. You should also decide how much you are willing and able to invest, and at what pace. Rather than investing a large sum of money all at once, it is generally advisable to begin by investing small amounts regularly. It is better to invest a large corpus over a longer period so that you need not worry about timing the market. You should only invest money in stocks if you are okay with the possibility of losing that money. Make a list of all of your income sources and then subtract your expenses and debts from that amount. What is left is your investment surplus. Some of that surplus should be put into a retirement plan, some should be used to pay for insurance, and some should be kept in an emergency fund. The rest can be used to invest in stocks and other investment instruments. Don't forget to factor in taxes when planning your investments. Step 2. Choose an investment strategy that meets your needs. It is important to enter and exit the market at the right time to make a profit in the stock market. Follow the stocks that you have already identified and track them in real time. The saying buy low and sell high is important to remember. You should try to buy when the shares of the companies you want to invest in are trading at a discount and sell when they are trading at a premium. This also means that you should not follow the herd mentality and instead buy when the market is dumping a stock and sell when the market is buying the stock. Step 3. Execute the trade. The majority of stock market trades take place online, so you should carry out your trade online too. Be sure that you are comfortable with the trading tool your broker has given you, and that you are submitting the trade request with the right price and quantity. If you need help, your broker will offer a free tutorial on how to invest in the stock market online. If you're planning to trade intraday, don't forget to set a stop loss and target price. You should decide how much you are willing to lose before investing in stocks, as it can be difficult to make rational decisions when the stock market is fluctuating. Step 4. Monitor your portfolio. It is important to review your portfolio periodically to ensure your investment decisions are still correct. The stock market is a dynamic place and changes frequently, so it is important to track your portfolio to minimize potential losses and maximize profits. This does not mean you need to react to every change in price level, but you must be informed of larger trends in the market. Here are some simple steps to get started with investing with confidence. The key to success is having discipline in executing your investment strategy and being curious to learn something new each day. Now that you know how to invest money in the stock market, see you at the market soon.